Do you have what it takes to shut down the noise around you and focus on key data, facts, and figures to do something positive for your future? Or are you going to get stuck in the herd mentality that we so often see in Australia? If you're looking at buying an investment property in Australia in 2023, this is the video for you. So make sure you stick to the end. Hi, my name is Roy and welcome to my channel, Roy Talks Property. On this channel, we'll discuss everything related to property investing, property finance, and the different strategies available for you today to build wealth through property. If you like the contents of my channel, please subscribe and make sure to hit the bell icon in order to get notified every time we upload a video. Your support is greatly appreciated. If you're thinking about investing in 2023, first of all, good on you. The reality is, you will get a lot of mixed feedback from friends, family, or even the media. But it boils down to two things: what you're hoping to achieve and where are the safest markets to invest in 2023. Whatever your goals are, buying a home down the track, funding a new business venture, maybe you're getting married, you want to fund your wedding, go on a honeymoon, buy a dream car, upgrade your home, etc. Having a few properties under your belt should help you achieve those goals. So it boils down to where to buy in order to successfully and safely invest in property in 2023. So what we're going to look at now are the fundamentals of a safe property market that you as an investor could consider when it comes to investing in 2023 onward. Did you know that there are over 200 property markets in Australia? Each market relatively has its own cycle and its own fundamentals for capital growth and so forth. That is why you're confused and sometimes baffled when someone says,
"Oh, the property market's going to crash."
Well, mate, which market are you talking about? Because clearly it's not just the one market in Australia. There are over 200 of them. At Buyers Club, our buyers agency, what we do is we focus on different markets across the country. So if you want to understand more about how we research those markets and what we do to identify them, book a phone call with me to start investing. Make sure you use one of the links to book a master strategy with me, and then we can get the ball rolling. The general consensus seems to be that the property market is crashing and will continue to crash in 2023 because interest rates have gone up. Let's have a look at the history of interest rates since 1986 and how that impacted the property market. In 1986, interest rates were sitting at around 17.5%. As you can see, the property market still doubled in some areas between 1987 and 2001. And that happened because interest rates started going down. So that had a positive impact on the market. Interestingly, between 2002 and 2008, we had a similar scenario to what we have today, where we saw the interest rates increase from 6.2% to 9.5% or so. But we still saw price increase or doubling in most of the capital cities around the country. What's also interesting for you to know is that between 2002 and 2008, the household income was nowhere near as what it is today. Interest rates do have an impact on the property market, but they are not the only deciding factor. What interest rates do is they affect your borrowing capacity. And if you're expecting or if you believe that interest rates are going to increase next year, that is why you need to get into the property market ASAP, because higher interest rates mean lower borrowing capacity. And that could be the difference between owning 2 properties in your portfolio and just 1 property in your portfolio. So now that interest rates have increased, we're starting to see a shift in the focus. And that is evident in the research or the article that realestate.com.au released a few months back. As interest rates started to increase, we saw residents of New South Wales and Victoria starting to shift their focus from their own markets into interstate markets like South Australia, Queensland, and West Australia. So what does that mean for you as an investor? In order to understand why the attention is shifting, you need to get comfortable with cash flow and to understand how cash flow of an investment property works. What's going to be really important is that you can comfortably afford to own the property long term and that you mitigate risk. That's what it's all about. Risk mitigation. Here's some practical steps that you can take in order to mitigate risk when it comes to cash flow. So let's talk about the cash flow of owning an investment property. To keep it simple, I'm going to talk in percentages, and I'm more than happy to answer any questions that you have about that. In today's market, the variable home loan rate sits around 4.5% to 5%. That is what we call your base cost. Now, we need to add your running costs, and that's council rates and water rates, property manager, and insurances. That is about 1% or so. So together, you're looking at ownership cost of 5 to 6%. So in order for you to own or to purchase an investment property that is neutrally geared, it doesn't cost you anything, you need to have a rental yield of 5 to 6%. The way you calculate rental yield is quite easy. You multiply 52 weeks in a year times your rental income per week, and you divide that figure by the purchase price. Now that we've identified that we need a 5 to 6% rental yield, the question is, which metropolitan markets are offering this kind of rental yield, and where in those markets can you buy houses? We're not interested in units or townhouses. We're looking at houses with land component. The answer is South Australia, Queensland, and West Australia. Now that the attention is shifting to those markets, you, as an investor, if you position yourself in those markets, could stand to benefit from that. Starting a property portfolio is a lot easier than you think. I'm going to link another video on how I purchased 2 investment properties for only $40,000 of my own money. At Buyers Club, we help our clients do the exact same thing, where we give you access to different markets across the country, and we find opportunities that are sustainable not only today, but for years to come. So if you want to learn more about how we offer our services, click on one of the links below to book a phone call with me. Or if you feel that you're ready to start your investment journey, then make sure you book your master strategy meeting with me so we can start mapping it out for you. That's it for today. Thank you so much for watching. If you liked this video, then please like the actual video and subscribe to my channel, and I'll talk to you soon.